Hi folks, Basil Chapman here, and I am about to have for an interview someone who I've listened to for, wow, I used to listen to Tim and Tom discuss the market way back before the year 2000. I remember being out there playing tennis, and I had my radio on. I was with a friend. We'd play together, and I'd be listening. And a great respect, certainly, for Tim. Hi, Tim. How are you?
Good. Thanks for great introduction. Thank you.
Well, it's a pleasure for me. And I would like, while I'm just trying to set things up here, I think we've got it. I'd like you just to tell us how people can reach you, etc.
You can reach me at ord-oracle.com. That's www.ord. And there's a hyphen, then Oracle, ORACLE.com. And that's my website. And I got my returns over the last, on the first page, over the last, 3-4 years. So anyhow, that's how to get a hold of me. Tim at ord-oracle.com is my email address. So anyhow, that's it. So
good. So
you want to
how
look at
about
some charts?
Yep, I've got your charts. I've got the first one up, and this is the spider. This is number one.
Yeah. Okay. Am I controlling the charts, or are you?
I'm not sure. So I asked ask L. I think you are, and I need to my as host chart. Okay, I think you're doing it. I'm looking at the Tiger TV, and that'll tell me, yes, I think you're controlling it. So I'm going to say, Tim, fire away.
All right. Well, anyhow, this first chart is just a daily SPY going back to 2015. And this is actually a momentum chart. It's a real simple chart, but it actually helps define if you're going to really start trending the market. I think this could be a trending market similar to what happened in 2020, which is back here. Anyhow, it went straight down, came straight back up. In other words, made a V bottom and pretty much just went straight up. And the reason why I think that might be a similar situation we may have here is the RSI. The right above the SPY daily is a RSI 5, and normally that's the first clue. When it gets to 90, a lot of times when the 5-day gets to 90, we're actually 90. That's 85, but we did hit 90 here a couple of days ago, and that's the first clue that if the 5-day gets to 90, there's a good chance the 14-day may get to 80. And 14-day RSI does get to 80. A lot of times that's a trending market. The declines are usually fairly minimal, and a lot of times there's no decline at all. Like this time back here, this time here we went sideways a little bit. But I think we're probably going to pretty much just continue up here on a short-term basis and actually get the RSI to 80. If that's the case, we're probably pretty much rest of the year is going to be a trending market. It hasn't happened yet, but I want to point out that's a possibility. Last time that happened came in July of last year. The RSI on the 14 period hit 81.98, and in general the market just kept moving higher. A lot of times that marks the halfway point of the move up. So we'll see if that happens or not. It's kind of putting the cart before the horse, but it's something I'm kind of watching. So there's a good chance if the market holds steady and moves higher here over the next couple of weeks, most likely that RSI on the 14 time frame may hit 80. If it does, then normally the declines are pretty minimal. Moving on to the next chart here. It's kind of a show of strength. This is WAG breast thrust indicator. We did get triggered here back in April. His WAG breast thrust indicator only comes at bear market bottoms. Actually only comes in bull markets. So if you see one, chances are you're in a bull market. In 2022 and part 2023, we actually had actually there's 3 of them actually happened in that bottom. and finally the market did take off. We just had one here in April. This is a wag breast thrust indicator, so we're in a bull market, so I don't think this low we had back in April is going to be tested. Matter of fact, usually wag breast thrust indicators come in clusters a lot of times. We had one back in April of last year. You had one in July of last year. If you notice, it all pretty much came in the same price level, between 500 or 5,000, 5,200. So that's a support area. So we blasted down into it and came right back out of it. So anyhow, we're back in the bull market. Can there be some consolidations? I think consolidations, but not any worthwhile declines. Moving on to the short term, so that's kind of an intermediate term view. I think this year is actually going to be a pretty good year, probably hit new highs before the year's out. This is a short term. This is the SPY. As the audience know, I only deal in panic, and panic only shows up at bottoms or consolidation phases. And the last three panic areas we had came right off the April low bottom. There was some before that, but what's important here was what's happening now. But to show panic, you got to have a trend reading of 1.2 or higher and a tick close of around minus 200 or lower. We had 181 down tick readings. Evidently, that was close enough. The bottom came 2 days later, which is within the parameters of the buy signal. We had one here in May, and we had one here just last Thursday. We had a trend close of 1.2 or 1.39 with 243 down tick readings. Actually, that's where we got long. We got long back in the low here, but I was trying to figure out where we were in the markets. And anyhow, this market wants to go higher because we had panic actually on an up day, and actually the market was up 4 days in a row. And we got panic on the ticks and trend, so we're long. Matter of fact, the market was up 6 days in a row going into yesterday. That predicts the market will be higher within 5 days, 85% of the time. So there's not going to be any worthwhile pullback on a short-term basis. Also, May 24th to June 5th is the sixth best week of the year as far as performance goes. So 24th is next Friday, I think it is, or actually today's the 20th. What is it? 24th is Saturday.
Saturday, so it's 23rd, right.
Just turned bullish here over the weekend.
So there's the music, Tim, and I'm correct. You know, climaxes usually come at unison at the bottom, and they spread out at the top. So I like what you're doing here. We'll take a break, and we'll back with Tim Ord, Basil Chapman sitting in for Jacob. Be right back. The Dow is down 107, S&P's down 31. We'll be right back. Hi, folks. We're back. We're back with Tim Ord. This is Basil Chapman sitting in for Jacob Shoup, and I am about to look at chart. I believe it is number 3 or 4. Tim.
All right. Yeah, we can go to 4 here.
Okay.
This is the gold market. This is a big pattern. This is a monthly chart, and the bottom window is a GDX up-down volume cumulative on a monthly time frame. So this looks at the bigger picture. And the next window higher, this is the GDX advanced decline cumulative on a monthly chart. And all it is I put a Bollinger Band on it. And so the green area are times when both indicators, that's the up-down volume on a monthly time frame and advanced decline on a time frame, are above the upper Bollinger Band. So that's the green area. When it's below the Bollinger Band, it's in the pink area. And we flipped to the bullish side across it looks like early 2024. You can see where we are right there. And as long as those two indicators stay, in other words, advanced decline and up-down volume, stay above the upper Bollinger Band, the uptrend's intact. These signals last anywhere from at least a year to as long as 4 years. So we got triggered last, we'll say March of last year. and it's been on a buy signal. It's not even close to a sell signal here on the monthly time frame. So what I'm saying is we're still in the early stages of this bull move, and once these two indicators fall below the mid Bollinger Bands, are time when the big bull market, I guess you might say, as far as the gold stocks are concerned, will end. And so you can see over here to the left where we are, there's a buy signal on a close above the mid Bollinger Band. So we're way above the Bollinger Band in both those indicators. So you can have consolidations, which obviously we will. We're having actually one right now in GDX.
So can I just ask you a question, Tim?
Sure.
I see that some of the smaller stocks, not all, but some of the smaller stocks in the gold and silver area have really, especially some of the silver stocks, have just started to move on very nicely. The SILJ and the JDXJ are actually having quite nice bounces off their lows. Does that fit into what you look at, where the smaller cap stocks start to play catch up?
Yeah, that's what's going on right now. You know, the AEMs, NEMs and all that stuff had decent runs. They'll probably consolidate with GDX, but a lot of these small ones are starting to turn up. And the first clue is look at the monthly charts and put a Bollinger Band on it. And what you should see is those little stocks closing above the mid Bollinger Band. And to add weight, add strength to that move is when volume explodes above. Once you get above the Bollinger, during the rise above the mid Bollinger Band on the monthly time frame, you should see big volume coming in on those stocks. And if you do it, chances are those are multi-month, if not longer term longer term runs. And then if you look at those little small charts, they're all turning up on the monthly chart. So we're in for, I think, extended rally. There'll be some consolidations along the way, but we're still in the early stages here. I think, I don't know how far, I don't see any signs of a major high anywhere near where we are right now. So it looks really good. Some of these, I remember Tom and I, we caught the bull market back in 2000. Some of these stocks,
I remember that,
25 cents. Yeah, they went to $15-20. So I think we have something similar here. Yeah. If you get the right one, they're out there, and right now you should, in my opinion, you should be looking for them. So this is the early stages here. So we can kind of look at some charts on the bigger time frame. This chart goes back to 2014. The bottom window is a GDX-GLD ratio. So this measures kind of the valuations of the gold stocks compared to gold. And so there's a cheapness and there's the expensiveness of gold. Back in 2016, back in here, that ratio got below 0.14, and that was a buy for looks like about 6 months before the market rocketed up. And we had a couple other times. We had 2008. 2018, you had a buy. The COVID crash got below 0.14. 2022, you hit it in, I don't know, October probably. Looks like about January, February of 2024, you had it. And again, back in January 2025 of this year, you got down below 0.14. When you get up around 0.20, up in this range up in here, which is that blue area I got crossed, that's when things get expensive. So if you notice here back, that picked out that high of 2022. 2021 picked out that high. 2020, that'd be the COVID high.
Right.
2016, it got way above 0.2. So we're coming in 0.16, kind of a neutral level. So in other words, this has room to rally, I guess you might say. And if you notice, basically since 2022, this market's pretty much just gone up. And
yes,
the valuation hasn't reached 0.2 yet. So valuation-wise, we're still good. So
good. I like that. Yes, very nice.
Yeah. So anyhow, it's so, in other words, these small stocks are going to come alive, and it's probably going to be a big speculative bubble at the end of this thing. But that could be, in my opinion, several years away. Don't know. I don't really have a clock at time where the exact date will be a high. But I did do some cycle work, and there's some cycle work that comes in 2027. That may change before or after that date, but I think we're at least clear for a minimum of a year. The reason why, because a lot of these monthly charts on the small stocks are just starting to turn up. So there'll be a big speculative bubble at the end, just like in 2012, 2011 in the gold market. And I think this is an opportunity. There's also a cycle. There's a 12-year cycle between the equity market and the gold stock market. And if you do that cycle, 2024 comes into that picture. So we may have a 12-year run here. Don't know. We'll have to wait and see. But it looks pretty good. The bad news is, this is the short term here. This is GDX. Got a minute and a half. So we got the three drives to a top pattern. It's a pattern that I kind of pay attention to because it kind of forms in gold stocks quite a bit. We're running into that gap that we had here I don't know, last week, and we're testing that gap in lighter volume. If you test the gap on 10% lighter volume, which we will, because that gap formed at 41 million shares, we'll probably run into that gap less than 30, so it's going to be resistance. But anyhow, three drives to the top pattern has a downside target to where the pattern began, which is around 39. And I think that's where we're heading. And I bet we head into that July 4th time frame, because a lot of times gold stocks, a lot of times there are highs or lows in that time frame. So we'll see how that works out.
So just to sum up, you're looking at a little toppiness here in the GDX.
Yeah, GDX, that's it.
GDX should start to break to lower lows.
Well, no, 39, I think that's about it. Then from there we turn back up again. Yeah.
All right, good. That's a fantastic overview. Thank you so much. I've always enjoyed listening to you, and great to be able to interview you. And have a wonderful. Oh wait, this is Tuesday. You'll be back on Thursday. So
yeah, Thursday.
Have a great week, and I'm sure that we'll be speaking to you on Thursday. Thank you very much.